All right, which one of you found J-Pal's money printer and plugged that baby back in? Because you deserve a round of applause for yourself. Thank you very much for doing that. Holy smokes, this ain't no jokers, folks. Absolutely epic, massive moves up in the stock market here today. Couple very important things I want to show you in this video in all seriousness, okay? One is I want to share a very important perspective on what has transpired and happened in the stock market over the last 6 months. And what has happened with companies, big corporations over the last 6 months, and what has transpired here that I think is very important for every single investor to understand the cycle we have just gone through and where we're going essentially, okay? I also want to share some very important perspective on basically an investor presentation I just listened to yesterday, okay? And this company deals with a lot of the biggest companies in the world. And what they told basically investors in this presentation is very important if you want to understand the state of big companies and how big corporations are thinking now versus the way they might have been thinking 2 months ago or 4 months ago or 6 months ago, because things change pretty rapidly with these companies, and one moment they can be thinking this, the next moment they can be thinking that, and I want to explain exactly what's going on there so you guys are all aware of this, let's just call it situation that's happening out there. Hope you guys enjoy this video. As always, thank you so much for joining me. It is my pleasure to do this video here today. Okay, so yeah, you should have been up a little bit today. Okay, let's just put it that way. And if I look at, when I pulled up kind of my big stocks watch list, which is like 25 stocks on there that I own, or roughly or so, the ones at the top were all the stocks that I own that are seen as more of the risk-on plays. Like all the ones that performed the best today were all the stocks that have been hit the hardest, that people would look at and say those are the riskier plays and things like that. Those did absolutely ridiculously well today, which shows you how much of a risk-on day it was out there in the markets, right? Fubu made a 15% plus move today. Shopify was around 9%. Revolve 6.6%. The Chef almost 5%. Meta 4.3%. Honest about a 4% move, which Honest has been absolutely on fire recently, okay? Good old Tesla, my Tesla, which, by the way, I was running numbers on Tesla last night. Oh my gosh, okay? 3.6% move there. Foot Locker is not really seen as a riskier play. Palantir is almost a 3.5% move for Palantir. So, risk on TV max today, okay? This next stock has become one of the most hot stocks in the entire stock market. I want to explain exactly why this is going on, okay? Fubo TV has gone absolutely insane recently, okay? And I want to explain exactly what's going on here with Fubo, essentially, because one side is, I think the investor day definitely got a lot of people excited about the long-term vision and where this company's going. But I also think there's a lot of short-term money that's starting to come in this stock that wants to play this over the next couple quarters, okay? Now, I hope these folks realize and don't forget about the long-term opportunity, because if they're going to chase a little money, we call it the breadcrumbs here, they're going to miss the whole loaf of bread. That's all I'm going to say about that, okay? But essentially with Fubo, if you pull up the Google Trends for this company over the past month, it has gone absolutely through the roof, okay? Now, when Google Trends is going like this for Fubo, it likely means there's massive amounts of people that are searching for Fubo and basically signing up for their service. Now, why is this? Well, college football season just started last week. We got NFL season that just started last night, okay? And also World Cup's coming in the next, let's call it 1 to 2 months or so. And so this is, the best case scenario for a Fubo, at least in the short term, right? You have this dynamic here in which, they're known for sports. They are the sports streaming service. So if you're going to consider signing up for a streaming service and you're a big sports fan, it's always going to be Fubo first. Then you might consider YouTube TV or something else, or whatever other competitors are out there. But it's always, if you're a big sports fan, college football, NFL, things like that, it's always going to start with Fubo if you're thinking about signing up for a streaming service. And on top of that, we're basically about to go into a big, let's call it political ad spend here, which is also going to be something that helps Fubo out in kind of a massive way here as they're scaling up their new kind of advertising business here. So I think there's a lot of folks that are in this because they know that likely Fubo's customers and their revenues are going to go absolutely incredibly high over the next couple quarters, let's just call it that. I just hope those same folks that are playing this from a short-term perspective just understand the long-term opportunity in this one, because yeah, they're going to be, happy with the little money, but they're going to miss the, let's just call it the big money. This is just a game in the second inning. That's all I'll say about that. It's a game in the second inning when it comes to kind of that one, okay? Now, Bitcoin, Ethereum, massive moves up here today, 5 and 10%. Meanwhile, the NASDAQ and Russell had a great day as well, about a 2% move. I think it's important to look at this from the perspective of what's leading what, man? Is it Bitcoin, Ethereum? Do those lead the stock market now at this point in time? Are they dictating where the stock market goes, or is it vice versa? And sometimes it's hard to tell, because on the same exact day, the NASDAQ will have a great day. Many times Bitcoin will have a great day. If Bitcoin has a horrible day, many times the NASDAQ has a horrible day. So sometimes I even look at it, I'm like, I've always felt like the NASDAQ leads Bitcoin, okay? And, whatever the NASDAQ's up or down, Bitcoin's going to be like that to a much higher extent. Like it's going to be up or down way more, right? But sometimes I'm looking at it, I'm like, man, it almost feels like Bitcoin's actually leading the NASDAQ. But it just seems like the markets in general kind of move risk on together or move risk off together all at the same time. And, it's so complicated nowadays because a lot of times these decisions are made by algorithms. Most trading is not even done by human beings nowadays. So sometimes, when you see a day like this, it's like, it doesn't even necessarily mean like humans were out there buying Bitcoin like crazy today or the NASDAQ like crazy today. It could be the algorithms, right? And, I think because so much of the market now is not even done by humans, I think because of that, it makes the moves in the markets more volatile and quicker than we've ever seen at any point in the financial markets, to be quite frank. And, as somebody that's looking for that kind of arbitrage of finding, stocks, or whether it be getting into Bitcoin or Ethereum or whatever, right, at the best price possible, you get some extraordinary opportunities to buy some, assets at some very, very low prices that you probably wouldn't get if it was only humans making those decisions, okay? And so I think that's just something to keep in mind, but it also can push up assets to prices that you never thought possible, because these things, humans are flawed, machines are flawed, the whole system's flawed. You look at something like Ethereum. Ethereum at one point, if I recall, was right under 1,000, or somewhere around there in June, if I recall, right? And here Ethereum is up 60-70% now at this point in time. It's an absolutely insane move there, okay? Now, this is no bueno. Okay. Commodities had a big day upwards here today, and this is kind of goes into the double-edged sword of the stock market, because it's great to see stocks up and the financial market starting to recover and those sorts of things. But on the flip side, like I don't want to see oats up, I don't want to see wheat up, I don't want to see lumber up, I don't want to see WTI up, I don't want to see natural gas up, I don't want to see corn up or copper up. I don't want to see any of that, to be quite frank with you. And this is a tough market dynamic right now, because here's the thing: if like all those commodities, if those continue to go up, it's going to continue to have inflation be at, let's just call, higher levels than if it continue to go down, right? So it's kind of unfortunate. It's kind of like, one side of me, I'm like, I hope stocks are going up. On the other side of me, I'm like, well, I kind of hope stocks go down so I can buy more shares. But on the flip side, I'm like, I really want to see commodities continue to go down, because if you look at a lot of those commodities I just went through there, they're still at elevated ranges. Yes, they have come down massively over the past 3 or 4 months, but many of those commodities are still very high from where they were at in 2019, 2018. So that is something to kind of keep in mind here. And, the problem with all those commodities going up, it pushes up inflation. If inflation gets pushed up, the Fed potentially has to keep raising. And that's obviously not an ideal situation, because in my personal opinion, the Fed raising interest rates is not going to magically fix those commodities to go down. Just because the Fed raises interest rates doesn't mean magically like the wheat price is fixed, or the corn price is fixed, or lean hogs price is fixed, or it doesn't magically fix those things. Okay, it can potentially put stress on the financial markets, but at the end of the day, like, people need to eat, people still need gas, people still need natural gas, these sorts of things. So that's kind of my perspective on that. But, in a perfect world, stocks would go up and commodities would go down, in my personal opinion, okay? Now, RH, a super high-end furniture company, okay? I listened to the first half of their conference call last night, and the stock made over a 4% upward move here today. It's hard to tell if that's a real move or a fake move, and the reason being is today was a huge day for a lot of stocks, okay? So, you can't get too excited about a 4% move there. But I listened to the first half of the conference call, and then I fell asleep with the AirPods in my head, and I don't know what happened in the second half. It might have went into my brain, but it just didn't process it because I was sleeping, okay? But the first half of the conference call was interesting because they did ask Gary Friedman, the CEO of this company, which, he's done an amazing job with the company and, building out their brand, and he's very excited for the long-term future of the company, right? But at one point, an analyst asked him two questions at once. I wish they'd ask one question at once, but they asked him two questions at once. And one of the questions was, did he see any positive recent trend over the past month in the business model? And unfortunately, he never really answered that question. I don't know if he purposely didn't answer that question or if he, let's just call it, forgot. Okay? So I don't know if he forgot or if he just avoided the question. But the company just guided for revenues to be down 15 to 18%. Okay? Now, this is obviously a troublesome sign, but it's something we should expect with the housing market being in a weakened state. Now, when it comes to RH, when does a luxury housing market, which is really RH's pure customers, luxury homes, right? When does RH's customer base start buying new homes again, right? And start, upgrading and things like that. And that's a tough thing for me to say is happening this year. I don't feel like it's happening this year. 2023, maybe at some point, luxury housing market starts to come back, but it's in a weakened state right now. It's probably going to remain in a weakened state. And meanwhile, RH has to comp against these incredibly tough numbers, right? Meanwhile, you've had the 30-year go up more recently. And remember, a lot of people with money still take out jumbo mortgages and those sorts of things, right? Because they would much rather pay interest on that and use their cash for something that they feel like is a better opportunity, whether it be in a business or an investment or those sorts of things. Now, Toll Brothers, which is the highest end home builder, right? What they told us in their last conference call was they were seeing that customer demand trends were improving for basically through part of August when they did that conference call, okay? But the issue is now with mortgage rates going up again, is that trend going on still, or is that just faltered? And so, that might be another reason why maybe the RH CEO tried to, either conveniently forget or just forgot, to maybe address that head on, because you can't get too excited for the real estate industry by, a couple week trend in the 30-year or something like that, because things could get massively worse. And next thing you know, the 30-year on average is 6% like it was earlier this week. It was over 6%. So these are just some, food for thought there in terms of that. And that's why I can't say this was a real rally in RH today. It might just be a fake phony rally. Okay. Now, the retail trader investor stocks, obviously doing very, very well. A lot of these stocks bottomed back in either June or July, depending upon the stock, and they've started to recover from there. And a lot of people look at it and they're like, is this real? Is this, do all these stocks going to reach some new 52-week low or all-time low? Because basically these stocks when they hit their 52-week lows, many of them hit their all-time lows as well. But that's kind of what folks are wondering here in this situation, okay? And, I can't remember if I reacted to this video on this channel or if it was on my new channel, Jeremy Lefebvre Makes Money, my new reaction channel. But I reacted to this video in which, this gal who works for JP Morgan Private Bank, which works with the highest net worth individuals, right? What she said is they're starting to want to position moving forward over the coming months into smalls and mids because they want to get ready they want to start getting ready for the next bull cycle. Okay. Now, I just thought that was telling because if folks are prepping the highest net worth individuals, hey, this is the next play. We got to start prepping up for the next bull run here. I just think that's interesting. It doesn't mean they're right. It doesn't mean they're wrong. I just think that's interesting because this isn't just like somebody that works for JP Morgan. This is the private bank division, which works with the highest net worth individuals. So that's just some food for thought. And especially when it comes to a lot of these smalls and mids, you've seen them bottom and you've seen them starting to, see some buying pressure. And it's like, where's that buying pressure coming from at this point in time? Where's it coming from? Does retail magically have a bunch of money? No. It's not coming from retail magically because retail's also loaded with money or something like that. It's coming from somewhere else. And, I thought something like that was very, very telling on kind of what's transpiring there, okay? Now, for an important perspective on the markets in general, okay, and companies, not just the markets, but companies, what happened with them in kind of, let's just call it starting in early spring, they got very much a shock and awe, systemic problem in the entire financial markets, okay? In this, if you are all of a sudden in a shock scenario, what's the thing you're always going to do. You're going to stop whatever you're doing. You're going to try to assess the situation. You might freak out a little bit, right? You might panic a little bit, but you're going to assess the situation. You're going to stop usually doing whatever you're doing, right? It reminds me of, playing football. I don't remember if this was sophomore year or what it was, but this guy, it was a 4th and 1. We needed this first down, and our fullback, man, he was busting through tackles left and right. It was one of the most incredible runs I've seen in my entire life, whether it be on TV or in real life. And he was busting through these tackles. It was incredible. He got this first down, and when he got up, his arm was pointing the wrong way, okay? It was not the prettiest sight. And he panicked, he's like panicking. But then you got to, you calm yourself down after a few minutes. You realize, okay, this happened. Like, I can't believe this happened. This is freak. But, you calm yourself down. You figure out, okay, this happened. I'm good with it, right? And the same exact thing happens in the financial markets when you get a shock event that is so surprising that it catches everybody off guard, and everybody says, oh my gosh, what are we going to do? And everybody pauses for a moment, freaks out a little bit, and then they assess the situation and they move forward. Okay? And so this is very much what happened over the springtime and into the summertime, right? Because we had all this stuff come out of basically nowhere. Valuations was something that was brewing for a bit, right? But we had obviously this. We had the crypto disaster, right? We had earnings all of a sudden starting to weaken in a considerable way. We had inflation go through the moon. We had fears about wage spiral. Recession got hit. And then, this became a more realistic thing when this happened, because a lot of folks didn't feel like this was going to happen. And then when this happened, all of a sudden people start saying, oh my gosh, maybe something could actually happen there, right? Because everybody starts figuring like worst case scenarios. And so you had all that happen in a matter of months. And everybody absolutely freaked out, right? And this leads to companies freaking out. This leads to everybody freaking out, to be quite frank, okay? And it causes a pause in companies wanting to spend money. It causes companies to potentially lay off employees. It causes companies to slow hiring, to slow spending on their businesses, because they're trying to assess the situation and they're trying to figure out, how bad is this going to get? How messy is this going to be? Okay? Now, that happened, okay? But we've had some time to digest things. And it was very interesting because Fubo did this investor presentation yesterday, okay? And they're starting to scale up their ad business, where they sell ad placements to some of the biggest companies in the world. And what they were saying is they've seen definitely some improving trends over the last few weeks when it comes to companies, realizing what happened and moving forward. And that's an important step in the right direction when it comes to companies, because they freaked out. Everybody got really scared because all this stuff happened. The stock market was crashing, right? Real estate started going down. Crypto was crashing. And, it was just negativity everywhere. But months have passed now. We've all had time to accept this. And now, as a CEO of a company, now as executives of a company, you have to start moving forward. You say, okay, we see what it is. It's time to move forward. It's time to grow our business, because that's what your dang job is. And in that moment, you can have some time to assess the situation, freak out a little bit, pause everything that you're doing, and then you start resuming. And that's what we're starting to hear from some of these companies, that, hey, everybody got to see what happened, and now we're starting to move forward, and these companies are going to move forward in a more strategic manner, in a smarter manner than they were before, which is healthier, to be quite frank, in the markets, okay? We got an example of the biggest kind of, in the last few years at least, the biggest example of companies kind of going through that cycle, right? Because all of a sudden, end of February into early March, Rona in 2020, Rona starts going crazy, and next thing you know, world's shutting down, and every single company paused almost everything they were doing for a couple months there, right? Consumers paused everything. Consumers freaked out. They stopped buying real estate for at least a few months. They stopped buying stocks clearly for a few months, right? And everybody just took a step back and was just like, what's going on here, man? And you need some time to digest everything, to figure it out. And then you can move forward. And just like what happened in Rona, eventually you start moving forward and you figure this thing out, okay? And the same thing's happening now. Even in 2008, 2009, there was a moment in time when, the economy just deteriorated massively in late 08 and into 09, right? And all companies had to pause almost everything they were doing and fire and do all those sorts of things, right? They assess the situation, And then they started to move forward again. And what did we see? Company earnings started to come back in the back half of 2009 as companies started to figure out, okay, we still need to do business at the end of the day. We got to figure this stuff out. It's our job to grow business. As a CEO and as an executive team, you're put in that job from the board of directors. The board of directors is voted on by the investors of company. If you don't do a good job as a board of directors hiring executives, you will get voted out of being on the board of directors of that company, right? So you as an executive, you can have a very short amount of time that you have an excuse of like, oh, the economy is weak or things like that. At the end of the day, you better start growing your dang business. You don't just get a long-term pass in that. I don't care what's going on in the economy. You better start focusing up and you better start growing. And then if others are growing in your space and taking market share, that's on you. That's on you. So you need to figure out how to grow your business. There's no time to just sit around forever and ever and be like, oh gosh, that's kind of scary. I don't know if I want to do anything right now. You can get maybe a 3-month span of that, 6-month span, and then it's like, you better get back to work, man. We're not just going to sit around and, play this game all day. Okay? And so that's exactly what ends up happening, and life starts to resume. People start getting back to business. Now, I will say it's a very healthy thing. It's kind of like, sometimes you got to put your kids in a timeout or something like that, right? They're going too wild, and you're like, hey, you need to go take a timeout. And I look at this as a very healthy time we've just been through here. Not to say it's over or anything like that, but just I think it's a very healthy thing because you think about what companies were doing, massively overhiring, in my personal opinion, not healthy, spending like it's nobody's business. Unprofitable companies were, just blowing money because you could raise money so easily. So it's like, why not just, And now every single company in this entire stock market, every single company in the entire world, to be quite frank, is much more watching their bottom line, their margins, what their profitability metrics are. This is a healthy cycle we've just been through because now every single company, what do they focus on? Bottom line numbers, profitability, cash flow. We need to get our business in a healthy place. And it's a good wake-up check to all public companies out there that, hey man, it's not just about that top line. We need to get our bottom line straight as well, okay? And I think that is extremely healthy and extremely needed in the market. And, some companies obviously are in let's say a more dire situation than others, but there's a lot of companies that have a lot of money on their balance sheets and a lot of money. But even those companies are wising up and realizing, oh my gosh, we need to watch what we're spending. We need to get smarter around this. And what emerges is a company in which is potentially much more profitable than anybody thought possible. They start to have a lot of cost savings in their business models because when these companies are only thinking about expansion, they bloat the cost through the roof because they're hiring like crazy. They're spending money on systems because they're not even thinking about like what they're spending. They're like, just spend because we're trying to just get the top line as big as possible, and that's their only focus. When you go through one of these cycles like we've gone through right now, I don't care what company it is. It's the biggest companies in the world, like Apple and Microsoft, all the way down to the smallest little teeny companies, whether it be an Honest or a Fubo or whoever. Every single one of those companies is focused on bottom line now, cash flows. That's where their conference calls are at. That's where their focus is. That's healthy. That's healthy. Spending forever and ever and thinking you're just going to continue to raise money and let me get another 500 mil and another $1 billion, That's not healthy, man. That's not healthy at all. So what I think's transpired here is going to be a great thing for the stock market over the long term. It's actually the best thing that could have happened. And the only way you get these companies to wake up and realize is collapse their stock prices. 40, 50, 60, 70, 80%. You do that, everybody wakes up real quick to the reality, okay? And so I think that's a very, very healthy thing. Hope you guys enjoyed this video. As always, if you're looking for any links, check out the description area. I got a few fun things down there. And also, thank you everybody that has subscribed over to the new channel, which, by the way, I still need to subscribe over there. I haven't even subscribed over there on my Big Dog account, man. I need to subscribe over there. But yeah, thank you for everybody that's subscribed over there. We only have 27 videos so far on the channel, already over 10,000 subscribers. So I very much appreciate everybody for taking the time to check out that channel, subscribe over there, and yeah, it's only reactions I do on that channel to other videos and things I see out there that I want to give my perspective on. And apparently I only wear orange shirts for that channel. Okay, much love as always, guys, and have a great day.